The question is, will it be sustainable? Prakash Diwan is with us on the show, and Vaibhav Sanghvi, CEO of at ASK Head Solutions, also with us. Gentlemen, thank you very much for joining in. Vaibhav, long or short on tech or neutral? And would you change your assessment post the US elections?
See, I think from technology as a sector, we have seen some good sized correction actually kind of happening post the numbers. Now, after the event of today, my view is that one of the big proposals from Trump administration is that they will rationalize or probably reduce the taxation rates, for corporations. Now, if that happens, what we may see is basically some, disposable income or from some amount of money to kind of increase the, spending in terms of the IT as well. So my sense is I think it will give a good lever for sure. And in a season where all of the companies or all the sectors are not kind of performing well in terms of their numbers, here is a sector which kind of gives you at least some amount of growth, which is kind of visible in that sense, and a sector which is kind of bottoming out. So my sense is basically because of this, you may see some amount of uptick continuing, on this space.
Prakash, any favorite IT stock that you would like to bet on, say for the next 12 months?
Except for Happiest Mind, and that too is more from bottom up, specific changes that have happened in the last couple of years and their ability to be able to take on more work in the new environment. I really don't think it's a bit too early to celebrate the Trump victory in terms of what it can impact IT stocks with. There's still some time, and I think it's only end of Jan that things will get much more clearer. So I believe a lot of these moves that you see could get sold into as well very quickly if some adverse news flow comes through. So yeah, but Happiest Mind irrespective is something which has consolidated. So from a stock perspective, it would probably be better off than some of the other well-known names.
Hi Prakash, hi Vaibhav, good afternoon, good to see you all in. Prakash, your Diwali pick is working. Nalco, that's up close to around 4% as we were discussing. Trump or no Trump or no tariff, alumina as it is in deficit. And this one stands to gain because they don't produce so much of aluminium, but they sell the alumina in the open market. So that I think from the time we discussed, it was 220 odd, it's already 245 rupees. So good on you. Prakash, the talk is that Trump is going to emphasize on producing more amount of oil and gas. And for that, there'll be pipes that will be required. One such company is Welspun Corp, right? I think we have discussed this in the past as well. And the biggest drawback for them is there's no orders coming in, which now that could turn around. We have already seen signs of that. And with Trump coming as the US president, well, he could emphasize that even more, which will give them visibility on the US business. Your view on this name, it's at around 770, up 3%.
No, absolutely, Nigel. We spoke about this as well the day they received a big order. And I think that's a start of a very different secular trend for them. His statement that leave oil to me very clearly tells you a narrative that would build up for the next 4 years where they have reserves. They need to start putting that to use. And, remember one thing that what they're looking at is an import substitution for oil and gas, particularly for oil, because that's the way he envisages paying off that mega debt that still stands out there. So I don't think there will be any reason. The good news from this is that a lot of the execution will happen very quickly. And will be front-loaded, which means it will probably be in the early part of the new administration. So yes, great times for some of these companies. Welspun stands to gain well because they also have localization out there. So even if there were tariffs imposed on some of these components, they will probably be able to get away with that. So absolutely in the right spot. And then from a stock perspective, we saw it move to 800 odds and then move to 700, and it's made its march again. So it's in a momentum of its own. Will definitely continue doing well, is my guess.
So Prakash, if indeed tariffs are imposed even on exports from India into the US, which companies, according to you, would be negatively affected the most? Would you look at any of these early trades?
The nature of tariffs is something which is very uncertain as of now. I mean, it's a general expectation that tariffs will be imposed, but it could be different with differential rates for different countries as well, or different components coming from certain countries. So I think it's a bit too early to call out that. But yes, some of the names which have done well in the past because there were no tariffs, inhibiting any growth. You had, let's look at things like transformers. Let's look at things like switch gears or diesel engines and things like that, which could start this thing. So, we spoke about pipes, for example. I mean, if that is a necessity out there, the tariffs will be softer or probably not there. So I think it's a bit too early to start looking at those things. But I don't think India will have the lion's share of the impact in terms of the tariffs as and when they get imposed. So it probably could get away with it on margin. But it's too early, as I said. It's only Jan that you'll probably get to know a lot of these things. But before that, market could probably take a different turn as well. So you could buy those things at lower levels in anticipation.
Prakash, thank you very much for joining in. Weber, weigh on the market on the whole. Ramesh Damani was earlier telling us that perhaps what we're seeing is just a bit of a honeymoon phase across global equities. It won't last very long. For the Indian markets, we could consolidate. Maybe the high for the year is already past us. It will take some time for us to go back to our earlier highs. What's the overall call on the markets? We've corrected about 6-7% now from our all-time highs.
See, Rima, I think when we came into October, right, we were at a cusp where valuations were pretty much at the peak. At the same time, when the quarterly kind of previews came, there was a clear indication that the numbers for the season were likely to be pretty mediocre or probably lesser than expectations as well. Now, we are at a situation where we've seen downgrades in terms of the earnings. Valuations corrected, a little bit, or I would say, making some of the pockets kind of, interesting. But on an overall basis, my sense is basically a good consolidation is necessary. And lastly, in terms of the expected rate of return from an equity as an asset class, my sense is, again, here our expectation has to be muted as compared to when we compare to the last 3 or 4 years, which we have witnessed. So overall, my sense is I think the earnings should be followed. At the time for PE re-rating is probably over. The sectors and the companies which deliver earnings are going to perform, going forward.
Okay, thank you very much for joining in. We'll slip into a very short break. We'll come back with more market talk. Stay tuned.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.